What's good, y'all? It's your boy Shaq with a dollar sign, and we back with another journal entry. Just really give you guys the play-by-play on what I took today and what I took yesterday. I guess we'll start off with yesterday, I think. Yeah, all right. So we'll start off with yesterday's setup. So yesterday was yesterday was hella interesting. I took two setups on gold. I took one setup at 8 o'clock, which honestly was a terrible idea. It honestly was a real break. I tend not to trade 8 o'clock open, just because I know this based on how long I've been trading that around 8 o'clock, especially when it comes to 8 o'clock open, if there's a setup, it tends to be invalidated, just with price action and just with I guess new traders coming into the market, it tends to fail. So me taking that setup honestly was a rule break and costed me a loss that I did not need to incur, as well as I did not close the setup where I was supposed to close, which ended up making me lose the full risk. This is literally, like, again, I'm not a perfect trader. I'm not perfect. I don't think any trader is perfect, but this is why, like, I keep stressing the importance of understanding and executing your setups and exits the exact same way every single day, because you don't know what's gonna happen next. And at the end of the day, you want to save your capital as much as humanly possible. That's the only way you can grow your account. I mentioned this in the last video where you can literally win one trade, lose another trade, win another trade, lose another trade, and if it's just the same risk and you're losing the exact same risk per trade, you're not really growing your account. You're just literally staying stagnant. So that is honestly like a real key takeaway from, I guess, the journal series that I want people and even myself to remember. Like, at the end of the day, it's not about winning 1,000 trades in a row. It's about preserving your capital, because the capital is how you stay in the game longer and how you actually grow your account. You know what I mean? If you continuously lose the same capital, and, like, again, if you continuously lose the exact same capital over and over again, there's no way that you can grow your account. And that's what happened to me yesterday. I took this 5 minute support here. Again, I noticed a bunch of rejections happening around the 7:40 to 8 o'clock area. So realistically, it looked more like this. Just to look more like this first. So like I said, I saw a lot of rejections happening around this area. I'll move this over so you can kind of see it better in case someone wants to start taking these setups themselves. So yeah, what I like to see when I take these types of setups is a break of structure, be it to the downside or upside. We had multiple breaks of structure here. So break of structure here, break of structure here. And I don't know if you guys remember this, but yesterday at 7 o'clock, the candles were like crazy. Like, there was so much volume. So when I saw that, I kind of looked at it as a potential for buys, as well as over the last from Monday, when session opened Sunday night, I saw that price was tanking heavily. So when a lot of buyers came in at this area, I kind of saw that as a possible shift. So what I did was, once I saw these rejections, I got in at this at around 8 o'clock. So, well, 7:45 was when the candle rejected very strongly, and then 7:50 is when the candle broke. I'll kind of zoom in so we can see again. Is when the candle broke above the candle that rejected. Um, I got in right as soon as it rejected. Stop loss was underneath this candle, just because that was the most recent biggest rejection. So I got in, price pushed a little bit, and then came back to stop me out. Where I should have closed was around here, but I allowed stop loss to be hit, just because I was so in, I guess, in love with the setup. And that's also another thing I want to mention is, you can't be in love with your setups at all. You have to understand that markets do what the markets want to do, and you're not necessarily in control of it, no matter how clean that a setup looks. So yeah, that happened, and then I noticed the exact same thing happening again, right around the 200 moving average at the time. The 200, well, it's the same. It's the same. So I noticed that the price broke underneath the 200 moving average, and then was wicking under, with a bunch of rejections here. Mind you, there was already breaks of structure. So from my knowledge, in order for me to look for a sell, I'd want to see multiple breaks of structure under here. I never saw that. I saw just price breaking 200 once, kind of faking out the sells, and then as soon as price rejected firmly, and then broke above and closed, I got in. Well, I didn't get in at the close, but as soon as price broke above strongly like this, I got in about three quarters of the candle. I got in on the buys. Price ended up going 2 to 1. From an execution standpoint, I also could have done better on this, just because, again, how when it comes to the 5 minute supports, support or resistance setups, what you want to see is you want to see price. First and foremost, you need to see a break of structure. Number one needs to be a break of structure, either to the top or to the bottom. But what you also want is, from a execution standpoint, is the moment that, so if you get 1, 2, 3 rejections, the moment that you get a candle that pushes above the previous candle that rejected your support or your resistance, you want to get in. So realistically, had I followed that execution rule, I would have had a 4 to 5 RR trade. But because of the fact that I kind of waited for price to break the 200 moving average and then kind of close or show me that it can maintain that volume, I got in, which only made that setup a 2 to 1. A win's a win, so I ended up making back that loss. But again, execution wise, I feel like I should have and could have executed a lot better. Mind you, the 200 moving average was there, and we didn't want to see price rejecting it as much. And also, at the time when I was trading gold, it was like negative 2% or almost 2.5% on the rate of change. So it was a gamble. At the end of the day, trading is a gamble in some way, shape, or form. We just do it from a more probability standpoint, but it was a gamble taking this setup. It ended up coming through, so I'm happy with that. I guess the result is great, but again, from an execution standpoint, if I'm not executing my exits and my entries the exact same way, I don't necessarily view it as a W day. It's just me. I do want to be able to replicate the same things day in, day out, so it is what it is. And then today was a quick win. Today I noticed that price had been breaking multiple structures to the downside. Price came back and then created like an area of resistance that it rejected off of, and then continued to break structure. So again, just for a knowledge purpose, if anyone's trying to take these sort of setups, we had 1, 2, 3. That's 15 minutes worth of strong rejections, and we go down to the 3 minute. You'll see the amount of candles that actually rejected this area. Same thing, we go down to the 1 minute, you're going to see the amount of candles that was stuck in this area. Rejections being here. Then we got this huge bearish candle on the 1 minute, but I'm just breaking it down. I really mainly stay on the 5 minute. I watch the 1 minute when I'm in the trade, but mainly the 5 minute. But anyways, yeah, so we had this rejection. Price came back, tapped it. And then once it tapped it, we broke multiple higher lows that was being made from this little run right here. So price made this previous higher low and then broke it once it rejected off this area. And same thing. And then started to make lower highs. So once price broke that, I noticed all of these breaks of structures. Some of them minor, some of them a bit more major. I also saw that there was this area of rejection or possible resistance that price may want to come back to check just because it was unmitigated. So if price did want to push back up, there is a chance, everything's chance, but there's a chance that price may want to reach this area of resistance again and then drop down. Yeah, sorry about that, guys. Yeah, so then what I did was I saw that there was a 5-minute supply also after there was a break of structure. Left a small gap here, price rejected. I got in late on this setup again from an entry standpoint. I don't know, maybe my executions this week hasn't been what I want to see. It should have been a lot better. Again, I'm happy that I won the setup. But it is what it is. You know, we could have took a loss. But I ended up getting in late. Price ended up coming back, closing this small gap that was here. Wicked off. I put stop loss right above the 13 in a sense. When I take my setups, I stopped using the moving averages as confluences. I only kind of use it just to like double check like what I'm doing, just to see if there's any area that the moving averages might create some sort of resistance or some sort of just imbalances. That didn't happen in this case. So price came back, checked the 5-minute supply. I put my stop loss right above the wick that closed the gap. I should have got in here once price broke the candle immediately. Once price broke the candle immediately, I should have got in here, which would have made the setup more of a 2-to-1. I'm gonna add screenshots in the actual throughout these videos, which I did last video, just to show you what the time frame that the moment that I got in on my Funding Traders account versus what it represents on the TradingView account. I hit a 1-to-1, but for TradingView it does not look like that. So I'm just gonna again show you the setup and show you the screenshot so we can I guess verify what I'm saying. Price pushed down, hit 1-to-1, and then I closed, and yeah, it is what it is. End of the day, it was a pretty quick W for today. But again, from an execution standpoint, I keep really preaching to you guys, and I have to really drill it to myself, because again, I'm not perfect, but we need to, every single day we come to these markets, we need to do the exact same thing every single day. There can't be no deviation from the plan, because the only thing we have is the plan. And I guess I'm going to keep repeating this until even for myself it's deeply drilled into my psyche. Because again, I'm still learning, you know. I know how to trade. I know how to read the charts. But the difficult aspect when it comes to trading is a psychology. The psychological aspect of trading. That's what makes, everyone, you can either buy or you can sell. You know what I mean? But it's not the strategy. It's the trader themselves. So if you can't execute your trades the exact same way every single day without deviating from your plan, be it emotional, be it whatever it is, that's going to hold you back. And it's going to also cut into the profits that you should have made on your trade had you just done the exact same thing over and over again. I showed you 2 examples of price, me not executing on the moment that price broke a candle, which should have made a trade almost a 2-to-1 RR. And then another one on gold, where me not taking the entry the moment that the rejection was done on my support or my resistance, that should have been a 4-to-1 RR trade, but it wasn't, right? So again, we take everything with a grain of salt. We look at what we did and look at how we can tweak it and make it better. Not in an aspect of switching our strategy or I was more so saying not in the aspect of just switching our strategy, but in the aspect of, okay, this is how we trade, this is the strategy we're stuck with, this is what we back tested, this is what we believe and see has worked multiple times. Just let it run and allow it to do what it's supposed to do, whether it's a winner or a losing trade. Don't deviate. As always, it's your boy Shaq with a $. Just again documenting my journey, showing you guys the ins and outs of what it took or what it takes for me, how I look at the markets, as well as just being transparent with my own with where I am. You know, some of the lessons that I need to continue to work on, and I'm hoping that what might take me a year to fully master, if someone's watching this, they can master it in 3 months. I'm just hoping that this makes it easier for somebody, and they don't feel discouraged when things don't necessarily line up the way they want to line up. But again, it is what it is. It's your boy Shaq with a dollar sign. I'm wishing you guys nothing but peace, love, and prosperity on your journey. Peace.